We are in Beijing, China, where Bruegel, along with the China Finance 40 Forum and the Peterson Institute for International Economics, organized the China-US-Europe Economics Symposium. I have here with me Nicolas Véron, who spoke about the G20 reform agenda. So Nicolas, after 5 years on, how do you assess the G20's performance in terms of financial reform?
When the G20 summit started in 2008 and 2009 with the Washington, London and Pittsburgh summits, the ambition was very high. There was this idea that the crisis was global and that the decision-making to address it should be global as well. Since there has been a bit of a cycle of hypes and disappointment and sometimes deep cynicism now, but actually when you take a step back after 5 years, you see that the G20 has done quite a lot under this financial reform agenda. The main exhibit is probably Basel III, and especially the capital and liquidity provisions of Basel III, which is an agreement about bank behavior and bank supervision. So this is pretty substantial. It's a big improvement on what existed before. Some people say it's not enough, some say it's too much, but I would rate it quite highly in terms of policy achievement. Apart from that, there's a lot of work in progress in statistical coordination and improvement in reform of derivatives, into liquidity aspects of Basel III, in a number of other work streams, including the very ambitious aim of ending too big to fail, or more realistically having some cooperation in the resolution of bank crises that have an international dimension. On the whole, still a bit early, even after 5 years. There is a lot which is still being done and on which it will be easier to judge in 2-3 years. These things take a lot of time in international coordination, but on the whole it's a bit of a mixed scorecard, where you can see some achievements, some outright failures. For example, the G20 had committed to have global accounting harmonization, a single set of global high-quality accounting standards. This has failed completely so far, but still enough achievement for one not to be too cynical about it and to recognize that at least some progress has been made on this financial reform agenda.
Asian economies, including China, having a larger and larger role in the global financial system, including very large banks. So what is the role of China and other Asian economies in the G20's financial reform agenda?
Indeed, that's in a way the biggest challenge that the G20 is encountering, and let me explain. The world is changing very fast. Obviously, Asia and China are playing an increasingly large role in the global economy and specifically the global financial system. But if you look at the structure of the institutions which at global level deal with these issues of banking, derivatives, accounting, auditing, financial regulation in general, they're very much dominated still by the US and Europe, with a bit of Japan, Canada, Australia, but really not much about the emerging large economies of Asia, including China, which is now by some measures the world's biggest economy. So why is this a problem? That means that there won't be buy-in, there won't be acceptance of global standards as long as we have this highly imbalanced situation. So G20 has made some progress in the sense that a number of the global bodies, standard-setting bodies, different coordination venues that are active in financial regulation, they have enlarged their membership, including the Financial Stability Board, the Basel Committee and others. But actually, when you look at how it works in practice, all the leaders, all the people who are leading these organizations, they come from the West. Almost all the outliers are essentially from Japan, and the organizations themselves, of course, are located in Europe, most of them, and the other ones in the US. So really, if you're in Asia, you can have a feeling legitimately that you're not really part of this decision-making process. Now, in fairness, not everything is to be blamed on the West or on Europe, which is massively represented more than the US in this global system, because China has not gone out of its way, for example, to propose potential leaders for global organizations that deal with financial regulation. So I think it's really a question of who may take the initiative, but if you look at the system now, it's very imbalanced. It's important because that means that it will be more difficult to reach solutions that can be really make a difference at the global level. And the risk here is fragmentation, that you would have a global financial system that could not sustain with impetus for regulation or re-regulation, the global financial system that could not sustain the current level of cross-border integration, which obviously would have significant economic consequences.
But in this unbalanced world then, what is the solution? Is there a way to increase somehow the role of Asia in the decision-making of various kind of financial regulations and institutions?
I think there are really a number of things that can be done at the G20 level to sustain the momentum that has started 5 years ago, and even to create a new momentum that would make the system more sustainable over the medium term. First, there are a number of incremental improvements, basically finishing the job that is already being undertaken. I'm not entering into the details, but there are a number of constructive steps that can be made by different jurisdictions and at the global level to make progress, but not without changing the system radically. If you want to think more radically in terms of how to make the entire system more sustainable over the medium term, more able to deliver its aim of having a global financial system which is both integrated, really global, and well regulated, which it wasn't before the crisis, I think you need to think on two main avenues for change. One is really to complete this process of rebalancing, and I think this requires two things. First, there need to be more Asians and more generally more people from outside of Europe and the US in leadership positions in these global institutions, and this requires effort, of course, from all sides. Proposing the likes of China must propose good candidates, and there is a lot of talent now in those large emerging economies, and of course the Europeans in particular, which have most to lose in terms of incumbent positions, they have to accept that their position in the world is not what it used to be, and that they have to make more space to China and others if they want the global financial system to be maintained as a global public good, which benefits Europe, of course. So, and also, I think in terms of the very location of those organizations, when, for example, new organizations are created, whether small or large, we should think that the geography of this global system should be rebalanced by locating those institutions as a matter of priority in Asia. And there are a number of Asian financial centers, for example, like Hong Kong, like Singapore, which can offer the sort of privileges, immunities, the legal infrastructure for global institutions. So that's one thing, rebalancing and bringing more importance to Asia in the global landscape of those institutional bodies which are concerned with financial regulation. I think also, perhaps even more radically, that one has to envision a move towards a global level of supervision of some financial intermediaries. And here I'm not thinking of banks or financial infrastructures which have big balance sheets where the need for financial support by a public authority might emerge in a crisis because the question of burden sharing is really too intractable at this point. But I think it might be more realistic to think of global supervision for actors which are very important in the global financial system, but don't carry financial risk per se, which are what you may call information intermediaries. So I'm thinking of audit firms, rating agencies, derivatives trade repositories, which are new players now in the landscape of global financial information. These are entities which are basically globally integrated, which require public supervision or regulation, and for which there is a risk really of fragmentation of the knowledge and information we have about the financial system, which is crucial to its integration if we don't have a global level of oversight. So here I think institutional innovation, experimentation would be in order. It might sound utopian, and in a way it is, but if you look at the European experience, there was enormous skepticism, actually denial of the possibility of having supranational supervision less than a decade ago, and now we have it. So it's possible to move in that direction when you consider the alternatives, and the alternatives are in this case is really losing a lot in terms of the integration and efficiency of the global financial system. So I would call the G20 leaders not to think only in terms of incremental improvements, but really to think in terms of institutional innovation and thinking of the sort of institutional orders they need to sustain the financial systems they claim they want to see.